An income statement is a document, probably of all the documents in a company, it's probably one of the most important documents. It's sometimes called a statement of income, statement of operations. There are several names that can be used, but it's up to the company to decide what they want to call it. In the United States, we use what is called GAAP standards. GAAP is spelled G-A-A-P, and it stands for Generally Accepted Accounting Principles. So that gives companies the latitude to sometimes use the different terminologies that they choose to use within their corporation. This one lists your sales year over year. It also says how well you're managing your operational or controllable expenses, and then it drops down to the net profit or net income. And these three numbers are watched avidly by the executive teams and also by the stock market. And you want to make sure that you're managing those numbers extremely well. Now, for a public company, you also add one more number to that, and that's your earnings per share. All these three numbers, four numbers really, if you take the sales, the operating income, the net profit, and the earnings per share, if they're all going in the upward direction, you know your company is doing well. If any one of those, though, is going in the down direction, then that's cause for a red flag and concern, and you want to have your executives examine that and figure out what do they need to do to reverse that and to make that number go up. Income statements are used to really manage the details and the strategy of the business. You look at sales, and when you're looking at your sales on a P&L, you want those sales to go up. If they're not going up, there's a couple reasons for that. Number one, it could be your competition's creeping in and taking over some of your space. You could have products that are starting to not work as well. They're starting to fail. So you want to make sure that your sales are always increasing. Sometimes you may have a product that's just not working out, and people stop buying it because now there's a new competitor that's got a new product out there that really works better. So you always need to make sure that you're doing research and development and always looking at future products that you can add to your grouping so that you can grow your business. The operating income, this one is super important, because this one is saying how well you're managing your controllable expenses. Some of that includes your selling, general, and administrative expenses, they call that SG&A, your marketing expenses, you've got shipping. So you want to make sure that you're managing the salaries, the budgets, your R&D in a way that makes sense so that you can continue to use that money to grow the business in other ways. You also have the net income, and you know what? Net income also takes all those expenses we've talked about, but now you add in the taxes and the interest that you might pay to borrow money. Companies are borrowing money like crazy. They can borrow money as low as 0.5%. Now, how would you like to go buy a home and get an interest rate of 0.5%? One of my clients, they borrowed $30 billion at 0.5%, and you know what they do? They turn around and make 10% off that money. So they really are using money to make more money. And then if you got your earnings per share, wow, this one is really closely watched by the stock market, because earnings per share really dictates, are you managing all your numbers well? Are you growing your profit in the way it should? What are you doing with your shares? Are you buying back shares? Or are you selling them because you need more money? So these four numbers, top line sales or revenue, operating income, or EBIT they call it sometimes, earnings before interest and taxes, net income or net profit, and earnings per share, the four key numbers or metrics on any profit or loss statement. So that's what I look at. I look at those numbers, I measure the growth of each four of those different metrics, sales, operating income, net profit, and earnings per share, and I look at the difference in growth rates at each one of those different levels. That's a key to helping a company really grow, because if you can start to become more and more profitable, you take that money and you're able to leverage it and go grow your business in different ways. And so very, very important metrics.